Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 29th of August here in 2023. What was the headline that pushed this market up? Looking at you, Nasdaq, 2%. Nasdaq was the strongest index off the open, and the XLK with the XLY, which is our consumer technology or consumer discretionaries, XLY, and the technology sector, XLK. Those were the strongest sectors in the morning session, and they ended at the close still the strongest sectors. What was it? Let's pinpoint this. Consumer confidence, right there, 106 versus 116. And ultimately, it was this statement right here that caused the market to go straight up. I'm being simple, but that ultimately is or was the catalyst for why the market sent itself to the upside and the bull side. Essentially short squeezing higher because consumer confidence declined in August. The index went to 106. The expectation was about 116, and July's consumer confidence index number revised down. And that right there, because consumers are less confident, sent the market up 2% in the Nasdaq and about 1.5% in the S&P. But why? We are all on pins and needles in the market about what the Federal Reserve is going to do with interest rates going forward. And the simple question is, are they finished raising interest rates? And is that it? TNX. TNX is our 10-year Treasury note yield. Are they done? And there will be no more rate hikes on the horizon. We are in backwards land, and we still are in backwards land, especially when it comes to the Fed. Whenever we get good or positive economic news, for example, the jobs or jobless rate, that's going to come up on Friday, the jobs report, if that's good, that means the Fed has leeway to raise the Fed funds rate because their goal is to combat and fight inflation. And the other side of the equation, we'll see another thing, which is Thursday, PCEPI, which will be inflation data. And that's where all of the focus will be. In fact, let's talk about the week ahead. So two things are going to be in play. Our core PCEPI, which is our interest rate, or I should say the inflation rate, and then the jobs report. But we remain in bizzaro land, where if inflation, I think ultimately to start with there, inflation reduction is the goal. So if the inflation rate, which we are seeing, generally speaking, comes down, goes lower, that means the Fed will probably not raise interest rates going forward. And we have seen the terminal rate in the Fed funds rate, about 5.25%. And of course, the other way, this is the bizzaro land. If the jobs report comes in strong, we could see the market turn and go to the downside even after today's weaker than expected consumer confidence. And the home price index was earlier, but that's what ultimately sent this market higher. Again, was our consumer confidence number right there at 7 o'clock in the morning. And just to show that on the intraday chart and how that sent all of the equities going in the up direction, there is consumer confidence, and that was the break above the expected move in the S&P and the Nasdaq. And the again, stocks on the leadership on the bullish edge were Tesla, we saw Charter, we see Nvidia, and AT&T, Verizon, and others. In fact, we'll look at the visualized tab to see where the strength of the strongest sectors were. So coming up this week, we had the consumer confidence weaker. And again, think in bizzaro terms, that's actually net bullish for the market because it suggests the Fed is finished raising rates. And why are we so adamant on little data points? Because the Fed has told us that they are willing to raise the interest rate to combat inflation just recently at their Jackson Hole meeting from last week. And they're not potentially finished, but they will be. And the Fed speak is data dependent. So again, if the data come in, two things to look at going forward for us here in TheoTRADE. If inflation numbers are weaker or coming in lower than expected, That's net bullish for the equity market because it suggests the Fed is finished and there's no reason to keep raising the interest rate or the Fed funds rate. It's net positive short term. Of course, we're looking short term here for equities. And on the other hand, the bizzaro world, if the consumer confidence or the jobs number or the employment rate goes in the weaker direction, in other words, fewer jobs created or less confidence in the future or less economic expansion, that is a reason that will put the Fed or put pressure on the Fed not to raise interest rates and risk a recession. So that is why markets have quick reflexes when it comes to economic data, especially those that miss the mark by so much, at least in terms of consumer confidence. And other informational and economic reports are there as well. That will set this tone or set the stage for the bigger picture. And I think it's down to the TNX. And the TNX, after hitting a new high, and the way we interpret this chart is looking at 43. It's not 43 for the interest rate. It's 4.3. And that's the 10-year Treasury note yield. We can look at the TYX. TYX is the 30-year Treasury yield, not much different, but it also made a new high. And again, the Fed has talked about raising rates, and that is in part what's helped send the market a little bit lower. We the economic community, we the trading community, would have liked to have seen the Federal Reserve stop their rate hikes at 5%, but they chose to go beyond that. And that has, in part, with other things, put economic pressure or put bearish pressure on equities. So as rates go up, that's going to put additional pressure. And any additional rate hikes, even the whisper of rate hikes in the future, would be net bearish for equities and equity futures. But by the opposite, if news comes out that the inflation's coming down or the economy is coming down, that could be at least short term. We're not thinking 6 months from now. We're thinking the next week or two. That's what these evening videos here on TheoTRADE are. Very, very short-term trades and very, very short-term opportunities. And right now, that is the game. It's still bizzaro land, but bizzaro land we are in. So where were or was the strength in today's session? Came in NVIDIA, Microsoft, Apple. The big one was Tesla. It was, again, the largest gainer in the S&P 100. Charter is small, but it was another gainer. But NVIDIA is up there almost just beyond a 4% gain in NVIDIA. And in Tesla, again, just about a 7.5% gain. Other stocks were strong. That includes Google, Broadcom, AMD, Netflix, Meta, and Apple, and the other stocks included. So outside of that, our monsters attack. Take a quick look at those. Tesla, after a break, is getting a strong bull 7% gain in today's session. Let's pull this on the weekly perspective. Chop in Tesla, but general, volatile, very volatile uptrend in price. NVIDIA simply remains the uptrend, and that is actually, it's obscured by the rejection from the expected move on its earnings. But closing at this level for NVIDIA shares, that's a new closing 52-week high. As that strong stock does get stronger, and other stocks behind it, we'll look at some of the communication stocks, are rallying up from support levels. Broadcom is a strong getting stronger, and Oracle. AMD also volatile, and Netflix. These are some of the leading stocks, at least things we look at on a daily basis in the technology sector, Google included, and Meta. Now, which stocks made 52-week highs in the S&P 500? I sort these by market cap, and they're Google, MasterCard, Cisco, Intuit, TJX, TJ Maxx, and then we have others, Eaton, Boston Scientific. And if we sort them out, we start to get a different, broader perspective. Where is strength concentrating? Communications, I consider that part of technology, and there's information technology. So all these to me go together. And then strength in financials. Not financials you're used to trading like Goldman Sachs or Morgan Stanley, Bank of America, those types of stocks, and certainly not the financial XLF ETF, but they are financial stocks in the broader market. Otherwise, a little bit of industrial, so there's mixture down here. And stocks making new lows, we'll take a quick look at those and we'll scan. If you ever want to put these on your list to scan for yourself, we want to go to load scan query. We'll go to public new yearly lows. We'll take a look specifically in the S&P 500 and then we'll scan. Not great market cap. Etsy is at new lows, but it's which stocks outperform the market, and these stocks continue to outperform and show relative strength. And that is in a market that once again is split. And we'll finish up with this as we look at technology stocks and technology sector. That's XLK. Retail to an extent is dominated by Amazon and Tesla. So that's why XLY was up as much as it was today. But if you go outside of those stocks and those major market cap leaders, you see that the Dow Jones only was just a low to high, a rally in the context of a sideways, non-trending trading range. And the same took place in the Russell. A rally, yes, but a rally within the context of a sideways trading range. And that is, again, very different than what we're seeing in the Nasdaq, which is bearing the brunt of the market cap leadership or domination of 2023. S&P to a lesser extent, and then the Russell, not a single monster of tech in the Russell. Always be careful, always be safe, and in the week ahead, once again, we'll be watching closely the PCEPI on Thursday, and then the jobs report on Friday. This is Corey Rosen with tonight's Theo video update for August 29th, 2023.